morning, everybody. Welcome to State of the Market. We are going live with Mark in 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends across the pond. I hope everybody is having a great Thursday. It is opening day in baseball, the day where every single person believes their team could win the World Series. I can remember I felt that way 10 years ago today. I wore my Villanova National Championship hat to opening day. It had happened, opening day was a little later than, and March Madness had ended. It was, to say the least, telling that Villanova would bring a World Series title for the first time in 100 years to the Chicago Cubs. So, folks, welcome to State of the Market. Today, we're going to be talking again about Iran. That is the story. But there is more to this than just oil. And we're going to be bringing on Tim Colby to talk about some of the ripple effects of what's going on with the closure in the Strait of Hormuz. As we open the day, markets are well off their lows. We opened the day down about 1%. We're currently in the S&P down about, call it 1/3%. The NASDAQ, the worst performer, coming in about down 2/3%. The Dow is up. We're seeing strength in industrials and kind of the rest of the market. Today feels like a bit of a Mag 7 problem so far. If you look at, how the SPX is performing today, and then look at something like MGK, which is the largest stocks in the 90 largest stock in the S&P, it is vastly underperforming the S&P. That tells you that it's Mag 7 driven with what's going on today. Which, a little funny, right? When you think about it, why is Mag 7 the problem when oil's going up? One thing that has kind of changed is oil has lost some volatility. Yes, it is still moving around. But take a look at how it was jumping around, let's say, as near as a week ago to the ranges it's showing now. When you look open to close, we're not really seeing any kind of major moves anymore. We've been USO's been stuck kind of hanging around 115. Now, here's something to think about. Markets don't really react to oil going up and down that much in general. It's when oil moves with volatility that it causes real problems. Right? If I know a year from now, WTI is going to be $90 a barrel, and I'm running an industrial company, no problem. I can manage it. When WTI is going from 76 to 99, back to 90, back up to 97, down to 85, up to 95. And you've got a lot of volatility in oil, and I have uncertainty on where my energy prices could go, right? You have Goldman coming out and saying WTI could go to 150. Meanwhile, still hanging out around, this under $100 level. Brent, another story, right? Brent's having the more affected of these. And kind of the same story. Look, kind of been holding a range. BNO, which is the Brent U.S. oil fund, the one that we don't follow as much probably here in the U.S., but it's trading around $50 and just kind of hanging out. If we start to see a reduction in oil volatility, most of the market can kind of handle. Right now, the issue you've got is oil going up and interest rate prices continuing to be high. Borrowing costs. That's a 1-2 punch the stock market hates. Right? Energy prices are a little higher. Darn it. Energy prices are higher and my borrowing costs are going up and up and up. Now I have a problem. And that becomes kind of the weight that is on the market. And think about that, right? Who is borrowing a lot of money, using a lot of capital, and needs a ton of energy? Going full circle from the start, from the beginning. Borrowing money and needs a ton of energy. Are we happening to be in the middle of the largest build out in U.S. history in terms of corporate investment? That's right. This affects AI. Not AI itself, right? Claude is still Claude, and Grok is still Grok, and ChatGPT is still ChatGPT. But all those data centers, all those build outs, all the trillions of dollars that have been announced in investment, that money needs to be borrowed, and those costs are going higher. Additionally, data centers are like a power suck. They need energy. Energy prices are going up at the same time. If you're asking yourself, oil prices, why is that affecting Mag 7? There is your answer. Their investments need two things, and both things are working against them. The last, rare earth, other pieces are involved, obviously. But these are the two biggies. They're borrowing money and they need power. And both of those are getting more expensive. So why is the market selling off today? There's your answer. But this Iran story has ripple effects beyond just data centers that I just kind of broke down that ripple effect. But we're seeing companies rally under the radar on this that are not energy, and companies that are kind of wilting under this combo of higher energy and higher borrowing costs. Now, to kind of break down where we are with energy as a whole and what these ripple effects are that could be seen, all the way to the grocery store, is our friend and head macro analyst at Option Pit, Tim Colby. Tim, good morning. I hope you're doing well.
Hey, how you doing, Mark?
I'm doing okay. I am doing okay. It's opening day. We got to get you a Cubs shirt, bud.
It's Red Shirt Thursday, I thought.
It is. The only day that Red Shirt Thursday is superseded is opening day of baseball.
Hell, you didn't tell me that. This is bananas. You guys you're cheating me. You cheated.
Fire the bananas, I mean.
Oh, dude. The first time. Yeah, exactly. That's right, Rawhide. Go Reds. Oh, that's terrible. You got to get a red Cub shirt.
You know what? That's a great idea. I'm going to do that. Get myself a good red Cubs shirt because it's in their colors.
I finally wore my Red Shirt Thursday, and I get grief for it.
All right, so Tim, you and I have been talking about this. Obviously, energy is the lead story, right? And then you kind of heard my data center discussion, right? The AI piece, right? They need two things, right? They need power and they need to borrow money, and both are getting way more expensive. It's a problem for Mag 7.
Yeah, it's a headwind. It's a real headwind. And again, we've talked on the show a lot about. I think everybody's pretty aware of what's going on in Iran, and the situation's fluid, or the situation's actually not fluid. And the ships are not flowing, although Iran is allowing some of their own ships through, and this gets to the point of what is the end game, and what does that mean for. What does it mean? What was we know what the point of this is. Trump was looking at getting rid of the nukes over there in Iran and trying to get rid of a terrorist funding organization. And the first part seems they got rid of some of their military capabilities. That looks pretty promising, and probably the nukes, but I don't think it looks like they got rid of the leadership.
I mean, they got. It's like a. It's like every time they cut a head off, a new one grows, right? Wasn't there a Greek god where you cut off the head and a new one would pop out?
Yeah.
Medusa snakes, I think.
It's Medusa snakes does that. There's another one, a Hydra. That's right, Mike.
Yeah.
So the issue is, they said they got somebody they're talking to, and they're like, I think he's a good candidate, and the problem is that guy hates America, and so we sent a 15-point plan, they sent a 5-point plan back, and it's pretty clear we don't see eye to eye what's going there. And Trump said we'll have a deal by tomorrow. I don't know if anybody agrees with that, but a 30-day ceasefire that's good. Like, that's really positive news. That makes me not want to buy all the VIX in the entire world. But look, these ships have to go through this strait. Like, stuff has to happen. Otherwise, we're going to have problems in the economy. I wasn't an alarmist to start because I lacked imagination about this dragging out further, because I thought Trump would have a plan you have to know this is a big problem if you shut that strait down. And that's Iran is holding on to the one chip they have. So we're starting to see the ripple effects. If I don't know if you can pull the move in. You know what the move index is? You know what that is, right?
Yeah, the move index is the bond volatility index.
It's the bond.
There's
VIX.
A couple of different ways we can look at it. An easy way to look at it. Does Move look at the 30-year primarily, or is it kind of the whole basket?
You're catching me off guard. It's been years since I looked at the Move. I forget the exact calculation. I used to run the entire calculation in the back, and I had.
Yeah, I mean, it's currently 90.
It's currently coming in. It's a weighted basket. It's a weighted basket between options on the 2-year, the 5-year, the 10-year, and the 30-year. It's complicated, but the general flow, it's like the VIX. And the thing is when that is going up, like the VIX is going up, that tells you that's implied volatility, by the way. That's not actual movement. Whereas the VIX is based on the options. These are based on the options. So there's historical volatility.
So what this index is telling you is how expensive are options on bonds across multiple classes. Similar to what the VIX does, right? The VIX, we call it the volatility index. What it really measures is how expensive is it to buy an option on the S&P 500. Move is telling you how expensive is it to buy an option on a bond. And you can get a good look at it if you pull up like Thinkorswim. You can just pull in TLT and look at its implied volatility or IEF, and it's going to give you a pretty good look at where options prices are for bonds.
Can we do a quick side note just while we're on it, because I'm dying to talk about this one, based on the fact that it is a index across the 2s, 5s, 10s, 30s. If you pull up a long-term chart going back to, let's call it 2011.
Okay.
If you remember, how far back does that go? That doesn't look right.
This goes back to 2005. So
where is
here
that? Okay.
Is 2008.
Yeah. Show the yes. Yeah, that was bad, right? That was haywire. But notice for a while, up and around between, let's call it 2013 to 2018, right?
Yeah.
So the
Mhm.
2-year and the 5-year with ZIRP, zero interest rate policy, the front end didn't move at all. You couldn't even trade it. The bond traders, options guys that I knew, they kind of had to stop trading bonds because the vol was 3 or 4, and they would trade, for ticks half. They would trade for quarter ticks a hedge or whatever. I mean, it was really crazy how tight the markets got because the vol was so low. But all of a sudden, you raise rates to 5%, and now we got some vol, and so it moves around a lot more. But the point is that if you look at this, focus in on the near term right here, like just the last month, this year only. Just zoom right into this year. There you go. And what I noticed in looking at this is in the last few days, the bond vol actually hit a peak just a couple days ago, whereas the VIX hit a peak about a few days after the war.
Mhm.
And that's kind of a to tell.
Bond vol hit a peak on March 20th.
That's right.
VIX.
And then look at the VIX peak
on the 9th.
It was like, yeah. So there's a 10-day gap right there. And what that's telling you is that it's telling you that there's the knock-on effect. So at first, the bond market's like, yeah, this is going to be over quickly, and we're not going to see ripple through effects. And now the volatility is like, maybe we're going to have some ripple effects, right? So it's pricing in uncertainty in the bond market because it's uncertain. I mean, I think we can all agree that we don't exactly know what's going to happen next. And you're starting to, so that's what you're seeing. That's in the bond market. That's massive, right? That's a big deal. And then you start to see other things come through. Mark, you had a couple questions about, we had some questions about why are fertilizer stocks moving around? Like, what does that have to do with anything?
Right. This was, I don't think a lot of people understand why fertilizer. We've heard like, oh, fertilizer prices are going up. Why are fertilizer prices going up? And then I want to kind of talk about some of the participants here.
Right.
What does the Strait of Hormuz have to do with fertilizer?
Well, there is a lot of fertilizer that comes out of the Middle Eastern, like the ammonia comes out of there. And natural gas, we use, natural gas to make fertilizer, and it gets pumped out, created and then shipped out through the Strait of Hormuz. And what you're seeing is crazy, is that people who are dependent on the fertilizer stocks that come out of the Middle East are having trouble. Whereas if you have a resource from somewhere else, like Canada, that's actually not a problem because it doesn't affect you. But the price is up a lot. So it's actually really good if you are in this space, but you do not need the stuff that comes out of there. And there's a few stocks that highlight this fact. If you look at CF Industries.
Yep. Ticker symbol CF.
Okay, that is going up. And that's a pure
it's
play.
Just below it's just off of an all-time high that I hit on the 12th. I mean, this thing has on January 1st, this was a $76 stock. It's now $132. Almost 100%.
I hate to say that it doesn't feel like the high is in yet, but it doesn't feel like the high is in yet, because this is a pure play on North American nitrogen producing. The feedstock to make this nitrogen is domestic natural gas. So like we have a bunch of natural gas. There's a big problem in Middle Eastern natural gas because, Israel hit one of those natural gas, the 20%, 17, I think it's 17% of the UAE natural gas production is going to be offline
by Iran.
5 years. That's really not great. And they don't import anything. They don't ship through the Strait of Hormuz. They don't import anything. This is a pure tailwind for CF because you get the stock going. You get they basically all their costs. All the stuff they sell at is much higher in price, and their costs are totally fixed. So it's great. Now go look at MOS.
Yeah, Mosaic.
MOS is also a fertilizer stock. However, they got smoked.
Yeah,
Right,
look at this.
rawhide.
Look,
Why did
I mean, it
MLS
popped
have
with
policy?
CF
This is
initially, right? Tim,
it
like
popped because it's a
I want
fertilizer
people to know.
company, and you're like, oh yeah, this is a fertilizer company. It should go up. It went up with the other fertilizer companies. That's great, except MOS is a phosphate and potash producer, and the problem is that phosphate comes out of the Middle East, and they have huge input prices. The sulfur prices have doubled, and their input costs are rising way faster than their output prices. So the margins are getting squeezed, not expanded. It's a problem from them. So while they're in the space, the problem is they're getting squeezed, whereas CF is actually getting expanded. If that makes sense.
Mm-hmm. So you've got winner. You actually have winners and losers within a space because of where they source.
Exactly. They have a huge headwind, whereas CF has a huge tailwind. And again, that come off a little bit? Like I wouldn't put the spread on, but like it's telling you that these are knock-on effects that are not on the surface obvious, but when you start to look exactly the winners and the losers, it starts to make sense. This is what we talked. I don't know. It was on Monday. We talked about private credit.
Yeah,
is that correct? For anybody who's watching, this is exactly what I mean about the private credit space. There's going to be people who are winning, and there's going to be people who are losing. And the problem with that one is it's not super clear because they all kind of own the same stuff. It's a little opaque because it's all private, so you can't really dig into the balance sheets of the individual companies. But again, this is we'll get into that at a later date, as because that story is still developing and there's shoes to drop in that space. But we'll get into that stuff. So the point is I think CF, put spreads to sell in CF are going to work. That has a tailwind. I don't know if I want to go buy the 150 calls in this stock, but I could sell put spreads and feel comfortable. And put spreads meaning I want to buy the stock. I'm happy to buy it lower. I think it has a floor, but I don't want to sell puts naked because the stock something could change in the stock gaps. Maybe there's an insider problem or something in the stock gaps lower. I never like to have unlimited risk in a single stock name. I don't like to have unlimited risk ever, but in a single stock name, I always worry about something funky happen with the business sheets or something like that. So I always like to have when I'm short options, I like to have protection on it just because I'm trading my own money, and I worry about. I'm not trying to blow up. I'm trying to make money. So WAs and marriage.
Make a lot of sense. I mean, if you look at the implied volatility here, Tim, put spreads make a lot of sense, and the reason being is like we're sitting at kind of historic levels for CF Industries. The only other time in the last 5 years options have been this expensive, you're looking at like May of 2022. I mean, you even look at like that April mess, we're well above the highs from there. And, obviously we're below COVID, but outside of COVID, these are levels we do not see very often, every 5 years.
I don't know if you can pull up the ATR, but I don't have it on my chart. I'm just looking at the bars on there, and the ATR.
There's ATR right now.
The ATR, look at that. Average, so like the average range on this thing. Implied volatility is, if you're not looking at ATRs and implied volatility at the same time, you gotta. The implied volatility has you check yourself because. The ATRs have you check yourself on implied volatility. It's moving a bunch, so like the vol should be higher. But directionally speaking, I feel like there's a better floor here, and it could be wrong, right? But I like that. And then there's more plays too in the space, so there's other things to look at. Not to belabor a point, but should we go on here? Like there's a couple more things to talk about. We're running out of time.
Yeah,
but,
I want to keep going. No, we got a late start because of the technical issues.
That's right.
And I want to talk about how this flows through to ag, soybean, wheat, and some of the names in there. Soybean in particular is really interesting because we've got kind of two things moving at once, right? You've got this fertilizer issue, and then you were talking about some sort of trade deal that I wanted to kind of get more info out of from you about.
There's something I know about that you don't know about. I love this. Oh, ask me some questions. I'm loving it.
Well, I may know, and I may just be pretending to not know, so to make you look smarter. So no, the trade deal in China is another piece to this. So you've got the fertilizer costs, and then you've got a potential trade deal between China around soy. Soy's had a crazy run. I mean, look at the run it's had in 2026. This is the ETF SOYB, Techrim soybean. It's beginning of the year it was trading around 21.60. It's moved up $3. That's a 15% move higher.
Massive move. What you can't see, okay, that's the soybean. That's let me just make sure I got this one right. They do only hold soybean futures, because there are some that have a mix where they hold soybean, corn, and wheat. There's some that hold, I don't think there's any that hold the bean oil. And the bean oil is the one that's actually really driving soybeans. So the soybean complex is soybeans, and then there's we got farmers in here. I know we have farmers, so I'm talking, and I know I'm going to be held accountable for not getting this right. But I know my stuff. You got soybeans, and there's a crush, and the crush is soybean meal and soybean oil. So you have two byproducts. Again, and we got tofu that comes out there too. But bean oil, there was a change from the Department of Energy about how to use, how you're allowed to use bean oil as an alternative energy source. So it's actually a fuel, and that is a huge tailwind. If you can start to use that oil differently, and you change the regulations on that, bean oil goes to the moon, and it's been going to the moon. It's one of the best performing commodities on Earth this year. And then it just got another tailwind with energy and oil. If oil prices go up, bean oil prices go up. And if bean oil goes up and you want bean oil, you have to buy soybeans. However, if you look at soybean meal, which is the other byproduct, you want all the bean oil, and so you buy soybeans and you want the oil, but you don't really want the meal, right? I don't want soybean meal. What do I need that for? It's
pet food.
So you end up having too much of that, an oversupply of soybean meal. Again, that's a little bit, doesn't really matter for this conversation. What matters is that China has two options to buy soybeans. They could buy soybeans from us. They could buy soybeans from Brazil. And Brazil likes to sell soybeans to China because China is a huge country and they buy a lot of soybeans. They eat tofu, and I mean, it's great. Sorry, I'm watching the chat, and it makes bad whiskey.
Yes. Soybeans, this is why we don't look at that.
That's why we don't look at the chat. Sorry, it's sort of a dancing hog.
Because they will do this to you. Folks, if you look at the chat, you will get derailed because someone will be hilarious.
So the point here is that China buys a lot of soybeans. And why is this important? And why am I telling you if you don't trade soybeans? Well, you might not trade soybeans, but you do look at stocks. And there is a stock that is a soybean crusher. And ADM is a soybean crusher. No, keep soybeans on the tape just for a second. Keep them there. Zoom in on soybeans. So before this Iran war, zoom into like the last 5 days or 10, right there. You see the big bar down to the right. Massive. If you zoom in, it doesn't maybe look big. I was down limit. Soybeans went down limit for the first time since 2023, 3 years. To get a futures contract to go crazy and hit limit is a big deal. You just don't see it that often. Now you see it in cotton, and you see it in lumber, and you see it in stuff that people don't really trade, like hogs.
Lean hogs, limit. We used to see it a lot.
Hogs hit limit. So I get terrified. I got a position I had one in hogs, and it's like, you're careful. Just don't be the wrong way. It's amazing. My favorite thing is to get into a trade and have it go your way and hit limit, and you can't get out because it's such a good winner. You can get out, but the point is you always want to have a trade on that goes limit. Never happens. Why did it go down limit? it went down limit because Trump was supposed to meet with Xi and talk about the trade deal that they're going to have and try to beef up the Chinese buying of soybeans. And they wanted to have they have a deal that's going through, and the soybean farmers, who are the voters for Trump, I mean, this is one of the things that he promised. We get a deal with China. And when he called that meeting off because the war, soybeans went down the limit because they're like, well, I don't know what he's going to do with China. Is China really? We're not going to have a deal. And so soybeans went down the limit, and that was crazy because everybody was long. Everybody in this future space was long soybeans, expecting to have, to have this meeting. What's really interesting, because all of a sudden it was a 1-2 punch. The thing with soybeans is you don't need fertilizer for soybeans. Soybeans actually are a fertilizer.
Oh,
right. Soybeans are a fertilizer. Okay. Corn and soybeans can be interplanted, interchanged. They basically, a smart farmer will change from soybeans to corn back and forth every year. That's what they do. They rotate. Anybody in the chat that's a farmer, you know this, you put it in there. It's what they do. You need, for corn and for wheat, you need nitrogen. That's a fertilizer. Corn is like grass. It's like a grass, and it needs lots of nitrogen. And if that's what the fertilizer is happening. So what farmers are doing this year is they're planting way more soybeans. They're going to plant a whole bunch more soybeans because they don't need the fertilizer. They can't. It's fertilizer is up like 30% in price. So they want to plant soybeans. This becomes a knife's edge, because if China doesn't do a deal with the U.S. and the farmers switched to planting a whole bunch of soybeans, we're going to have a bumper crop. In a year, we're going to have too much soybeans. China's not buying it. Now soybeans actually, instead of a huge bullish case, is actually a really bearish case. So so I'm a small long soybeans. The thing is, it's all right. So now we can go to Archer Daniels. Let's go to Archer Daniels, right. ADM. Sorry, I know I tangented a little bit like that, but it's interesting, and all the little details matter, because you want to be in CF, you don't want to be in MOS, right? And so we're trying to find the ones to be in, the ones not to be in. And Archer Daniels is a soybean crusher. So as long as we get Chinese demand coming back and we get the crush margins to expand, that's gold mine for ADM. That is really good. As long we got to get China to deliver on a recommitment agreement on buying soybeans, and that's a huge tailwind for ADM. So you got ADM and you got CF, right?
Mm-hmm. And you don't want Mosaic.
And you don't really want Mosaic. So I mean, the big volume spike you see in ADM, that's March 20th. You look at every stock on planet Earth, and it's got a huge volume spike on March 20th. That's because that was Friday before Trump said he was going to blow the whole world, blow up the entire country of Iran up in 48 hours.
Yeah.
But that was like not that that's a buying opportunity. It's look, ADM, CF. I think ADM you could buy calls. I think CF you could sell put spreads. That's my story, and that's what I got.
So there you have it, folks. Couple takeaways. We like selling put spreads in CF. We like buying call spreads in ADM. Why call spreads? Which means I'm buying a call close to where it's trading and I'm selling one further out, because that's going to mitigate the higher option premiums that ADM has right now around the Iran war and this potential deal with China. So we're looking at call spreads in ADM, put spreads in CF, and stay the heck away from Mosaic. All right, everybody, we are up against it. Ran a little bit long today, but I think it was worth it. We hope. Tim, thanks for that kind of deep insight into the entire soy market and what we're seeing and where there's opportunity. Go Cubs. I hope everybody has a wonderful day. So for Tim Colby, our head of macro trading, I am Mark Sebastian. Tim Colby. I am Mark Sebastian. I am your only option. We'll be back tomorrow, 10 a.m., as we are every single day. Have a good one. Go Cubs. And thanks, Amin.